Everybody, this is Tom Long. Thank you very much for sticking around. Over about the next 45 minutes, we're going to talk about some trading platforms, MT4, which I think you'll find that information is pretty easy to find all over the internet, versus the Trading Station 2, which may be a little bit more difficult to find information that is because it just isn't as popular. I know the MT4 really came out gangbusters because of the ability for traders to do some back testing. It's finding it fairly easy to do code. Not for me though. Between you and me, not for me. But a lot of people found it very easy to do some code and to do some back testing. Whether that's been of any value to them or not, leave it up to the individual user. But in fact, that is one of the reasons why the MT4 became very, very popular. But we're going to spend some time here, talk about some of the things on Trading Station to offer you a fair comparison between the two. And as usual, our risk disclaimer, because we are professionals here, we want to talk about the fact that this is speculation that we're talking about, that we're taking advantage of, which means that the risk reward goes hand in hand, that we want to make sure that this is speculative investments or speculative money that we're using, and of course not money that you would need to pay your bills on a monthly basis, but what they call extra money, which is kind of a weird term, but that is what is kind of used in the speculative field, or speculative investments. But the fact is that if you've been trading at all, you have a pretty good idea that high degree of leverage can work both ways. It can be the reason for some tremendous gains, and at the same time, sometimes it feels like it's at the same time, be the cause of some big losses, which what we want to be in tune to, and we want to help alleviate by using sound money management. For this webinar, we're going to be talking about the trading platforms. Now, as far as the Trading Station 2, we're going to go to this in a second, and when we're done talking here, and we're going to go through some live examples of some things about the FX Trading Station. And it is something that I have used pretty extensively over a period of time. And I've got some secrets, particularly a website that I want to share with you that will dramatically increase the value of the Trading Station to you in terms of indicators that you can add to your Trading Station. Because one of the things about MT4 that was really huge is you can go all over the website and find indicators that you can add into the MT4, and you can find them that traders have simply made up. And whether, like I said, whether they're value or not, that's a different story. But you can find them all over the place, and or you can learn a little bit more about it and learn how to manipulate those indicators to make them your own. And that was always one of the big advantages of using the MT4, even though there were some disadvantages, like maybe the liquidity offered in the platform itself. But the advantage of, or the ability to write your own script, create your own indicators, find a way to write a script that represents an approach to strategy, an approach to trading, and do some back testing. That has always been the big part of MT4. And if that's something that you're really not interested in, then perhaps looking at another trading platform might be the way for you to go, because like I said, the Trading Station offers things that are a little bit different, and I think most of us are aware of the MT4, but still we're going to go over them and talk about them. But this is an opportunity to point out some things about the FX Trading Station that you may not be aware of. And of course, trade confirmations are fast. You've got the open position window that you can check at all times to see what trades are open. And it does gives you a market to the market, otherwise a pip by pip profit or loss of not only your individual positions that you have open, but your overall portfolio if you're trading multiple positions. It will let you know, as the market is moving, exactly where it is that you stand as far as money gained or money lost. And that is not necessarily unique. You'll find that with many different trading platforms. Otherwise, you know, if you don't know how much you're ahead or behind, really, what good is the platform to begin with, right? And you know, but the trading station does do it in a very simplified, easy way to be able to take advantage of. And you know, the one-click trading. Now, some people call this an advantage. I call it something that you've got to be really, really be very afraid of, because there have random trades have ended up in people's accounts as they sit there and kind of lean into their mouse just a little bit. And next thing you know, they're long or short, you know, a trade. And you cannot call up the brokerage firm and say, I didn't mean to do that. There are no mulligans in trading. Of course, mulligan being a golf term, that if you hit a bad shot, you can say do over, and if your partner say, okay, that's fine, you can do it over. It doesn't happen when you're trading live. So if you trade, you know, do that one click accidentally, that trade is yours. I myself use a two-click. Otherwise, I click once on the trade I want, and then I click again to confirm it. You know, because like I said previously in our previous webinar, my goal is to really keep that risk and minimize my risk. And one way to do that is to make sure I don't get in trades, which I really didn't mean to get into in the begin with. So I set mine to two-click. But I think you'll find that traders like Gregory McLeod, who was did the first webinar today, who can get into scalping, as he will do his pip and run tomorrow and get into some scalping. I think he probably uses the one-click trading because he's getting in quickly in and out of the trade. I don't get in and out that quickly out of my trades, but some traders do, and for them the one-click trading is something to take advantage of. The trailing stop, using a trailing stop, of course, when we talk about trading, the one thing I always, I just don't want to, I don't want to say recommend, I will, if I knew you personally, I'd mock you if you didn't place a protective stop in there with every trade that you have. There is no such thing as a mental stop. A mental stop is not a good idea. You want a hard stop in the market, and if you are going to be away from your desk on a short-term trade, you can use the trailing stop, which the trading station offers, meaning that you can set it to be dynamic, meaning that with every pip the market moves, the trailing stop will move the same amount, or you can set it, in this example here, you can set it for a certain number of pips. Otherwise, the trailing stop doesn't move until the market's moved 10 pips. It moves 10 pips, but it has to move a full 10 pips before it moves again. That way you're not following that stop so quickly to where you're not giving the market a little bit room to breathe, which can be big, but of course that depends on the approach to trading that you're using at the same time. But this is an advantage for traders who are trading kind of shorter to medium term, but can't be with the trade or on the platform during the entire trade. You can use this to manage the trade without having to be there. Okay. Now, of course, you want to be there when the trade kicks off, but you don't even have to do that. You can, of course, set an entry order to get into the trade. And when the trade kicks off, your protective stop and your profit target kicks off at the same time, and you can even use a trailing stop at that time. So you can really manage the trade without having to be there with the tools that are available on the trading station. The margin watcher feature. I hope that you are never introduced to this, because this usually means that you were trading without a stop. Margin watcher feature happens when, if you've ever traded futures or stocks, typically when you get a margin call, meaning that you don't have enough money in there to hold the position that you got open, you'll get the courtesy of a phone call and being able to wire the funds in to keep your position, but only for about a day or two before they start liquidating your positions, because the firm becomes at risk at that time. And the margin watcher feature, if your account balance moves below what you need in margin to maintain that position, all of your positions will be closed. Not some of them, but all of them. It's called the margin watcher feature, and it is, when I had mentioned before, that for those traders who don't use protective stop, that just let the market fly, they're usually introduced to this margin watcher feature, and that's really not a good way to go. And you want to be more in control of your risk rather than letting the platform take care of that for you. The advantages of the Metatrader 4. Um, if you've heard EA, then you know what Metatrader 4, the advantage of it is. It is an expert advisor. Now, to me, that's kind of an oxymoron because it's code, but that's what they're called. Now, expert advisors can be, like I said, indicators, personal indicators that you've developed yourself, but more than often than not, they're usually approaches to trading, meaning that when the market is below the 200-day simple moving average and stochastics moves from above 80 to below 80, you initiate a position, okay? And it will do that automatically without you having to be watching the market or at the screen. And so that has become very, very popular. Um, I'm about to say, not for me, but that really doesn't have anything to do with you. But I like to be a little bit more control of when I get into a trade. And using software like that is not what I would call being in control. But at the same time, obviously it is for a lot of people, because this is the one reason why the MT4 has been so popular, um, maybe over the 10-year period now, is because of these EAs. And you can go just, I think you can just put EA in the search engine, whether Yahoo, Google, whatever it is you use. Just put EA in there, and you'll find a plethora, a never-ending list of EAs that are available that you can copy and paste and put right into the MT4. And you can also find all kinds of places that will explain to you exactly how you do that. To really, it's just really a matter of cutting and pasting. Um, my opinion of this has always been that learning how to write code is something different than learning how to trade. Now, if you can do both at the same time, you are indeed in a very good position. Um, but if you're just learning both, I think you're much better off learning how to trade, learning about the financial markets, learning what makes the markets move, and most importantly, learn how to take advantage of that movement. And spending all your time trying to write an EA to take advantage of that really kind of gets you off the beaten path of learning more about trading. Some people would disagree with that, and that's fine. And from their point of view, it may be absolutely right. They may be very, very comfortable with writing code. And me, I'm not. I am old school, which means that I have no interest in learning something like this now. I've moved down too far in my trading career, to go back and learn how to code things that I know pretty much, before I get into it, that it really doesn't, it's not going to work for me anyway. But having said that, there are many people who are very, very comfortable, writing the code, and they really just get a kick out of, finding different approaches um, to code into the Metatrader 4 platform, so they can do historical testing, which is really the key. They can go back and they say, okay, if I would have done this when this happened, and done that when that happened, if I would have done it over the last 5 years, what would happen? You press a button and it'll give you a readout on what happened. Very, very powerful, but at the same time, um, a lot of times that misses that step in between is, is it doable in a real-time market? And that's a big, big question, and one of the things that usually is left out as far as expert advisors. But the numbers prove themselves, very, very popular, used quite a bit, and EA, if you're a MetaTrader, you know what EA means. If you've heard it and have no idea what these people are talking about, that's what it is, an expert advisor. It is just code written to however you want, whether you write it yourself, or like I said, you can go on and you can buy some, but you can get so much that's free right now that you really don't even have to go through that level. The advantages of MT4: easy import of a wide array of trading instruments to trade, which of course is the same for the trading station. But the MetaTrader 4 is something that you can really kind of use and manipulate to kind of fit, your interests and what it is that you want. Now, for some traders, they just want access to the market, as many markets as they can. So MetaTrader 4 isn't, something that perhaps offers. They don't do best what you need, and where trading station might, but really it is really up to the individual trader and the route that they want to go. There are just as many traders who really like the coding aspect of the financial markets, and for them, Metatrader 4 is, they're very well versed in it. They've been using it for a number of years, and because there are certain advantages of that, but that really is the big one, is the coding aspect of being able to look into historical data and find out if you would have done this, it would have been ineffective, is it worth, working on, or is it just something that you just need to get rid of? Like I said, this is what we talked about, is you will find many communities. Like I said, I think all you have to do is put EA in these days, and you'll get pages and maybe dozens of pages at this point in time on different stuff, and quite a bit of it is free. And but there are some indicators that you have to find that are not available on the MT4 that you have to go out and search to put into the MT4. And for traders who are really uninterested in that kind of code, or really want it to be a little bit more an automatic process, that may not be the rate to go. But like I say, it gives you the ability to do things that very few other trading platforms do. And like I say, it's that four-letter word, code. And if it's something that you're interested in, then MT4 is something you want to look into a little bit closer. If that's not your game, then maybe Trading Station is something, and we're going to show you how to up the abilities of the Trading Station to kind of come close to meeting what MT4 does, except much easier process. So this is the one that we want to talk to. I want to go to this website. I'm not even sure if I have it saved. I hope I did, but if not, but right now we're going to go to the FX Trading Station. I want to show you a couple of things. And no, I didn't, so I'm going to have to go and I'm going to have to trade it. Now, the first thing about the FX Trading Station is that the symbols that are available, and we can go to the symbols list, and we have a wide variety of things that we can use. I want to go from what I've used last time. We were talking about the CFDs, and I want to put some currency pairs here so we can kind of talk about. But it's just a matter of changing it to what it is that you're interested in trading. Yeah, that's enough for now. And now we've got something, the currency pairs listed here. Now, as we go through here and take a peek at this, we can see that all the information that we need is right here on this on the box. It's the Euro-US dollar currency pair. We can see the low and the high of the previous day, the spread right now. This is a demo account, so the spread's going to be a little bit wider. And also the interest rate, otherwise the rollover, and of course the sell price and the buy price. We mentioned before that you could do the one-click or the two-click. That is in the trade settings. You can set it here. You can see I have a double-click, but you can go to the one-click, and you can set your stop. You can set your limit, and like I said before, you can really make the trailing stop any way that you want, whether it's fixed. That is the number of pips that it has to move before your trailing stop moves. If it's dynamic, it moves with the market itself on a pip-by-pip basis. So that is really what you want to do. You can change the order type. Most people will just keep that as at market and good till cancel. Particularly if it's at market, the good till cancel is really not necessary because it goes right into the market and it is filled at the next available price. So basically all we have to do if we want to buy the euro dollar is go ahead and I double clicked it and I am in. And you can see the information that it shows here. The euro, US dollar, my margin, and the stop move. If I was in market, I had a dynamic stop, so every time it moves that much, my stop changes. And the profit or loss in the pips, and that is extrapolated out depending on the count. This was 100,000, so it is $10 a pip, and it is reflected there. And you know, it just shows you everything that you want, and it's also very easy to get out of the FX trading. You can either just click on the sell side. Of course, it's going to be the same size, and it'll just, oh, this is set for, see, now here's the difference. In the US, we cannot do this. This is it's called the hedge feature. But basically, you can buy and you can sell a market at the same time and be open on the buy side and on the sell side. Now, you might want to ask, why would somebody want to do that? And that's a darn good question. But in fact, there is a reason. There are quite a few traders who use multiple approaches to trading. One might be longer term and one might be shorter term. And it's not unusual to be, say, for instance, short the US dollar, the euro dollar right now. But on a short-term basis, want to take advantage of a corrective move in a longer-term trend, and they would do that. But the way to close this out without having to open up another position, see, I'm not used to that. I have a US-based account, and if I were to do that, then the market would automatically close. So you just hit the close. Again, I've got the double click, and I close them both, and it would show the profit and loss. That's what's great about the market. You can buy and sell at the same time and lose on both trades. But of course, we're just doing this to show the advantage of getting in and getting out of the markets. But there's a number of ways that you can do that. Now I want to open up one more and talk about something. I'll just go ahead, and this time I'm going to sell. Now on the chart, it's going to show, for some reason this got to slow down today depending on the things that I have open. Let's go down to about 5 minutes so we can see what it is. You can see that on here it shows the red means that that means close. I have two trades that are both were losses, but you can see that this one line here shows where I shorted the market, okay, and the other line here shows the protective stop, my initial protective stop that I put in there. Now I may also have, yeah, and it also has that limit order in here because I had that preset in the trading to be able to take advantage of that. So one of the great things about trading with the FX Trading Station is that if you want to move your stop, you don't have to go back to the platform. Otherwise, you don't have to go back here and change it. You can just simply click and drag. So it'll ask you, yeah, did you really want to do that? Yes, I did. So I wanted to move my protective stop down, you know, to take advantage of any market movement. And so this is really big for traders who like to trade quickly, and a lot of trading platforms will have this, but this is one of the first to actually do that. And this is something that most traders will use, particularly if you take my advice and you always trade with the protective stop in the market. And please do take that advice. It will save you a lot of money. But being able to manage the trade like this just by using the chart is a great advantage. You know, it kind of, what we want to do on trading is, you know, when we're into trade, is to really use as many senses as we can. You know, I used to tell people that, you know, if I could figure out a way to do a scratch and smell on a successful trade, we would include that in our webinars because we want to see the market. You know, we want to hear, we want to everything. We just want to become, what I like to say, one with the market. Okay, one of the keys of trading is not try to determine where the market's going to go. It's just reading the market and letting the market tell you where it wants to go so you can get on and enjoy the ride. And a way to be able to do that and manage the trade, of course, is by using the charts, by seeing, you know, they say a picture is worth 1,000 words, and it's very, very true. And you can see exactly, you know, what the market is doing and where it's going. But right now, I want to, and I'm going to have to, if you'll excuse me, since I did not have this open, I'm can see we are having some issues with the computer today, but I really do want to show this link to you. And this is the link that we, like I said, I had it here. It is fxcodebase.com. If you're not familiar with this and you're using the FX Trading Station, you're going to like this. This is where you can go to place, and I'm going to show you in a second how many pages there are, but where you can go and add on indicators into the FX Trading Station that aren't part of the default. Otherwise, when you get the FX Trading Station, there are maybe 3 dozen indicators on there, but you have the ability to add, let me see how many pages we have here, 65 pages of indicators on there, just about everything that's available. Just about everything that these programmers see that's available for the MT4 is also available for the FX Trading Station. And then one of the first couple of things that they have on here is how to install the indicator onto the platform. So the instructions are there. But this is where I go when I'm looking for indicators sometimes just to see what's available, because there's so much incredible work being done because of the fact that everybody's got computers sitting on their desks now, that that these guys who have gone out and searched, they read all the magazines, all the periodicals, they're on the internet trying to find the newest indicators that have been available, and they will put them on here so you can download and you can add them onto your trading station. And just go through a couple of examples here on something, because it's really incredible what they have available. I mean, we've got a 3 MA bar indicator, consecutive candle count, support and resistance, and some of these I've never heard of. And granted, some of them really aren't a lot of value, but there are some in here that really are valuable, and you can find ways to really use them into your trading approach that really make a whole lot of sense. For instance, if you're day trading, you can go, and this one is just a market sessions open, but there's one here that shows market sessions, and it will, by color code, show when the Tokyo market is open, when the European market is, London market, and the New York market are all open, so you can get a better feel for, because those markets will trade differently because of liquidity, and you can get a better feel for that. My apologies, I've got a lot of things open right now. You seem to be moving slow in this neck of the woods. So, but anyway, but if you go through here, you'll find that, I mean, there really is no end to the things that you can use, the indicators that perhaps you've never even heard of, but yet they are available. And so if you like playing, if you've got kind of a technical mind and you like playing, but you don't feel like doing all the code or searching, you'll find they are available here. And I've got quite a few of these on my trading station platforms that I use. And I'm going through it quickly. I don't intend on going through all 66, but I do want to show you, and that is, once again, that website is fxcodebase.com. If you just put fxcodebase in your search engine, you will find it in there and be able to click on there, and you won't be disappointed, to all of the things that are available as far as adding on new and valuable tools. And just in the interest on who does this, let me go back, that these guys do work on donations. That's who's doing it. But particularly for people, there's a lot of people who ask them to code different things for them. So if you do that, it's nice to throw a donation there. But if you're just looking to take them off, it's really no big deal. However, if you have the MT4, you also want to go and check out FF Codebase because they have many, many indicators and advisors for free for the MT4 at the same time. So if you like the indicators, if you're more of a technical trader and you just consider it candy, you just can't get enough of it, check out the FX Codebase, and I think you'll like what you see there. And like for instance up here they've got the MT4 and all the indicators that are available for that one. Got 23 pages of indicator. Certainly if you don't find what you're looking for there, you're probably looking for something that may not exist. No reason to reinvent the wheel, in my personal opinion, because somebody has already done it. The fact is that there's an incredible amount of information here for both. But this kind of levels out the playing field, and for traders who don't like doing code themselves, but do like the ability to use a number of different technical indicators, and they also have some strategies that are available at the same time. Strategies and signals. Otherwise, when a certain, depending on the moving average, a certain thing happens, an open or closing trade would an opening trade would automatically be activated on your software, and also has instructions where it can close automatically too. Like I said, that's not necessarily my game, but I do like using some indicators. Only one or two though. You don't want to get it to the point where you're looking at your screen and all you're seeing are lines and you can't even tell what the market is doing, because there's no better indicator than the price of the market itself that you're trading, and identifying the trend. Last time we looked at the oil market, you don't need indicators to tell you that this is an all-out bear market and the market is just being hammered, that you want to be on the sell side. You want to trade with the momentum of the market rather than trying to guess when that market is going to end, so something to take advantage of. So that's the FX code base. Let's go back here to the FX trading station, and there's a couple things here that we want to talk about on the charts themselves. And here's one of the big things. Now, one thing that I found was that the time frames on the FX trading station offers a lot more than the MT4 account. For instance, you can't get it's just easier to get the 1 hour or the 2 hour to 3 hour, 6 hour charts. And if you wanted a 10-minute, chart, all you have to do is put M10 and hit enter, and it will generate a 10-minute chart for you, even though it isn't available on the pull down. So you've got a lot of flexibility on this platform too, more flexibility than I think people give it credit for. And we all usually think about how flexible the MT4 platform is, and it is, but this one offers pretty close to the same amount of flexibility, and I think it might be just a little bit easier to use. But one of my big points on this is the bid and the ask price here, something that a lot of traders aren't aware of. And we talked before, particularly Steve was asking about the spread, and this is the way we can identify the spread on the chart. Otherwise, right here, I've got let's say that my protective stop is that I wanted to put above this high. Okay, that's fine. But as a matter of fact, we want the ask side because the ask side is the buy side. The bid side is the sell side. So, you can see how close it is, how it changes. There is a difference between the two. So when we're counting the number of pips, we want to make sure that if we're talking about an entry, a sell entry, or a sell exit, that we've got the bid side of the market, which is the sell side. And if we're talking about a buy entry or a buy stop or a buy exit, we want to use the buy side, which is called the ask on the market. A very, very big deal. Because it's not unusual for brokerage firms to get phone calls from people saying, I got stopped out of my trade, but the market never moved to my my price target. And perhaps you felt the same way at some point in time when you were just getting into the markets. Well, you have to realize that there's a spread that you're dealing with. If you sold the market, you have protective buy stop in there. you need to look at the buy side or the ask side of the market to make sure that's where your protective stop is going to be. Because if you set it at the sell side or the bid, it's going to be a little bit lower than the buy side. So if you thought you were using resistance here, this is a resistance level to place your stop, you may not have been because you were on the wrong side of the market. Something that you really want to watch out for as far as managing the trade. And of course, these are the indicators that are available, and you can see that I've added quite a few on here. I must have really been playing here at one time because I've added quite a few on here. But I really don't use them, but you know what? I'm a student of the game at the same time. I'm a professional trader, but I'm also a student of the game, and I think that's one of my edges is, that I just don't stop learning. Even though I work with a lot of people and help them in the markets, I don't stop trying to learn more about the markets myself. And that usually means find out what's available technically, to help me with my decision-making process. And very few of them do, but at the same time, I want to remain open-minded on the possibilities because at some point in time, somebody's going to develop an indicator that it may not be better or worse overall, but it really only depends on how it looks to me. I'm a big believer and there are an unlimited number of windows to look through to find successful trades in the market, but while there may be an unlimited amount to look through, there are a limited amount that makes sense to us. That's why, one trader does one thing has been profitable for a long time, using an approach. It may not work for another trader, and that is not unusual at all. It's because really what we're doing is, we're judging by our own belief system. And if there's a step in there that you're just not buying into, then you're going to find reasons not to get into the trade or not to be aggressive or as aggressive as you should be. And, so keeping an open mind and seeing what's available, both of these platforms really give you the ability to do that, particularly to take advantage of the technical indicators or just, the technical tools that are available to help identify entries into trades and exits out of trades. Very, very big, always something we want to take advantage of. Like I said, but if you decide not to use them, that's fine too. But that doesn't mean that we don't want to be aware of them. So, and we've got the on the Epic platform, you can show the simple, which basically shows you everything that's available, or the advanced dealing window, which kind of shows you a little bit more in graphic form. The spread, the margin, the price per pip, and of course the market itself. Either way, I usually keep it on a simple dealing rates window situation because I can see everything. I can see the pip cost, I can see the margin, and I would rather see as much information as I can on one screen than have to fool around and find different ways of looking into it. Now, I mentioned before entry into a trade and entry out of a trade. And we press the entry button. This is when you're getting into a trade at a price level that the market is not trading at right now. Okay. And fortunately for us, I don't have to identify whether it's a stop or a limit. The difference being, of course, that a buy stop goes above the market and a sell stop goes below the market, which is the opposite of a limit. But we won't get into that right now. What we will get into is the fact all I have to do is put a price in there. So the rate, I can change the rate to whatever I want. Say I wanted to buy this. This is the Nikkei. If I wanted to do it, just at 18,800, I can do, or I can even do that and never get into the trade. Just a wide, I can set any price that I want. Keep hitting that twice. There it is. And any price that I want in there, and then I can, if I want, I can place the protective stop in the market. Otherwise, if I'm buying here, I want my stop to be below the market, and my limit to take profit, I want to be above the market. We'll just keep it there for now. And I can just click OK, and that order will stay there and wait for me until the market moves up to the price level I've designated for my entry, and then the trade will automatically be open. And because I have my protective stop already in the market and my limit order to take profit, I don't have to come back and manage the trade. Otherwise, I don't have to be there when the trade is actually is opened because I've taken advantage of it using the software I have available to manage the trade if it opens up automatically. So, and if I decide that's what I don't want, I can just simply remove the order and I'm out at the same time. Now, if you want to go in on the market, oh, oh, if you want to go in at the market, you can just do it that way. That is not letting me do it right now. And but and I also mentioned before, at the trade settings, and something else is the report. This is key. This will show you. Otherwise, I can go back and find out all the trades that I've done since the beginning of the year. And this market is probably only a couple of them because I just use this, well, two to be exact. I just use this to talk about CFDs, but it shows you everything that you've had open, closed, overall. This is really good because I think that one way that we can improve as traders is to go back and look at what we've done and then go back into the charts and take a peek at it and see, okay, I bought here. And, sometimes going back and looking at it later on, we see things that we don't necessarily see in the heat of the moment. So we definitely want to make mental notes of that and learn about us as traders, how we act and react to the market. If the market starts moving fast, do we kind of, get a little crazy and want to get in as soon as possible? Do we chase markets? Otherwise, if we wanted to buy and the market's already moving up quickly, do we just go ahead and get in, or do we just show some patience and wait for the market to come back to us? I mean, those are things that we want to determine who we are as traders so we can move up to the next level of trading. And both of these platforms will allow us to do that. So I think really the big key between the two, certainly a trading station offers more tools. The MT4 offers the ability to be a little bit more free flow with your code, particularly on developing strategies. So I think that's really going to be the key. If you're into code and writing code and want to develop strategies, the MT4 is something that you want to look at. If not, or you just want to take advantage of the indicators that we saw in FX Codebase, the trading station is maybe what you want to stick with. The beautiful thing of it is that you can open up demo accounts and kind of get familiar with the software before you move on to to trading live. And we certainly have talked about that a couple of times, and it's something we'll talk about through the process of these webinars. Is demo accounts are really to learn the software, and but for trading live, that's where I think where you really learn about trading. We talked about before with the emotions of trading, and that really is a big part of your success or failure as a trader. Or let's just talk about your degree of success. Let's talk positive and think positive. And so you want to go live